Welcome everyone back to another episode of Market Talk. We have Joe Valente from Tabachak Law, Robert Snyder from Silex Financial, and my business partner Jeffrey Kalafut. Welcome, gentlemen. Thanks for jumping on today.
Yeah, thank you for
So
having us. Good to be back.
it's good to be back. We just had a grand opening. This is the first recording after the grand opening. We've been running around with our heads cut off, so let's get back into the groove of things for sure. So. What's going on today's market, and what do we see moving forward in regards to interest rates, housing prices, and the overall, inventory? So we'll talk about some of those points today. So let's jump into mortgage rates. Bob, want to take it away for us?
Yeah, sure. I feel like a broken record on these interest rates, but yeah, the Fed cut 50 basis points. Originally, it was going to thought was 25, and then it went with 50, and everybody thought that that would mean lower interest rates. And when that happened, since then we've gone up about a 0.5%. So basically, the bond market saw rates, the Fed doing their cut, and over the month before they had lowered rates, and then when the Fed actually did 50 basis points, we saw some stronger economic data to follow, and rates started to creep up a bit. They're still low in the low to mid sixes. We're still seeing some solid rates. It's much better than there was, 3, 4 months ago.
Mm-hmm.
And
Oh,
I kind of starting to feel like they're going to hover around here for a while. You know,
okay. What do you think about 2025?
I'm still sticking to mid to high fives in 2025. I think that's where we're going to settle down next year. I don't think we're going to see super low rates, but that's where I'm looking.
Gotcha.
Look, anything in the fives that's a fair rate to me.
Mm-hmm.
Yeah, we've been saying for quite a while that, I think a lot of us in the industry think that that's going to be you know, the number needs to be in the fives for the inventory to really bump up, for more people to get comfortable with selling their homes and with buying, right? Because people had rates that locked in at threes, the high twos, and what was going to make them comfortable actually entering the marketplace again. And I think that we're right there. I mean, even today, like in for Long Valley, New Jersey, right? There's just under 40 listings active, and we're in mid-October. To me, that's a little surprising,
Yeah,
right? Like we
I would
were
agree.
hovering like through the summer, like we were lucky to have like in the 20s,
Hmm.
and now all of a sudden we're up to almost 40, which again still is not a lot of homes. Still a seller's market, but it's definitely showing some improvement for people are selling, people are out there buying. There's no doubt.
Yeah. Bob, when do you think, what is your indicator for someone to refinance? Is it a point, half a point, quarter point?
I've
What
been
are you
having these
recommend?
conversations with people a lot. So I'm in a different category than a lot of mortgage guys out there. I am telling my clients to be a little bit more patient, that we'll see lower rates next. But what I'm doing with them is I'm having conversations of what is your threshold. I guess it really depends on the loan amount. I mean, so it's not really about a point or half a point. It's more about what the savings would be, what your interest. So some people say to me, you can save me 150, $200 a month, I'm in. Whereas others are like, yeah, I need to be like $500, $600 a month before it makes sense for me. So what's the
Mhm.
savings? What's your threshold for that? Um, what's the break even point? Like I like to see it close to inside a year. So, there are costs involved in a refinance.
Mhm.
Even though some people advertise no cost, there are costs. They're coming somewhere. So um, so that's my thought is having these conversations of saying let's not jump. I think we'll see some lower rates next year, and let's figure out where that rate needs to be for it to make sense for you. And then we're just keeping an eye on it.
Gotcha. So yeah, it's more of a case by case basis, what somebody wants to save each month potentially, um,
Yeah.
and kind of go
Well,
from
look, I
there.
mean, it's very different. $800,000 mortgage and a $300,000 mortgage, you're going to have a different amount of rate you're looking at, right?
Hmm.
1% on a $800,000 mortgage is much different than a $300,000 mortgage. So
For sure.
Hey Bob, with home equity at pretty much an all-time high right now, are you seeing a lot of cash out refinancing happening at all?
Not a lot, because the problem is no one wants to give up their 2-year increase,
Yeah,
right?
Right,
So we're having a
exactly.
lot of
right,
conversations about home equity loans, and
right.
home equity lines of credit, and those are pretty decent now. And if you believe the Fed's going to continue cutting, those are directly related to the Fed cuts.
Mhm.
Right.
So they're not doing a cash out refi, but they're doing a HELOC and then just keeping their interest rate what they have now safe. And then, because that the HELOC rate will fluctuate, correct?
Correct. It's based on prime. So typically they're somewhere in the low eights right now, depending on the
Mhm.
situation. And if the Fed cuts and continues to cut, those will go down.
Mhm. And those are usually 10 years on
They're
average.
usually 25 or 30 years with 10 years interest only.
Okay. Interesting. Okay. Very nice. Joe, what are you seeing transaction wise in Jersey, in New York? Has the volume increased? Are deals becoming a little bit more like smoother, or is it still a battleground?
Yeah, in terms of like volume and deal flow, I think for the first time in like 2 years, there's like a stabilization in like a steady amount of deals, but the fluctuation of one week where you have 10 to 15 coming in, the next week having only a couple coming in, that's kind of stabilized itself, and that may be indicative of what's going on with the lending market, right? As
Mhm.
rates stabilize, people's I feel like become more stabilized with their decision making as well. Like, all right, this is
Right.
what it's going to be. Yeah, we're not gonna wait. If we're gonna buy, we're gonna buy. But I think we will see a stabilization of the real estate market in the next the months to come. I think that's the first time I could say that in a long time.
Right.
So it's not the hottest market in the world, but it's also not the market that we had in 2023 where we were like, oh man, this is brutal. So we're not in a bad place right now. I think the sky is still a little bit higher. We can go with some
Mhm.
good news dropping, but I don't think there's going to be a slowdown that
Mhm.
we had in past years in the January February months. I think it'll be pretty steady.
Yeah, I agree
So,
with that. I've had a few phone calls this past week from multiple people that were looking to list their property, and to get those calls in mid-October is pretty exciting,
Right.
Yeah,
right? Like, they're serious sellers. There's plenty of serious buyers that are still out there waiting over the
right.
past couple of years. So, and their homes have continued to appreciate. So they're
Yeah.
sitting in a good situation.
yeah.
All
I
Right.
these
could I
people.
could say like the last couple of years specifically, after the COVID boom, me and my partner sat down and we were like, all right, like little concerned. We got a plan for January February. I don't have a great feeling. I don't have that same sentiment today, so it's good. It's a much
Right.
better, more steady feeling than I've had in years
Mm.
past. We've
Yeah.
actually, we actually hired staff, so we're anticipating things to stabilize and pick up, if anything.
Nice.
That's good.
How is the emotions? Has the emotions and transactions settled a little bit, or are they still redlining?
They've definitely, I mean, they've definitely settled. Doesn't mean home inspections are still fun, but I think there's definitely less of the heated interactions on home inspections that we've seen over the last 18 to 24 months.
Right.
It's less of a battleground. There's still some transactions that you see that on, but
Hmm.
I do think I think the people that are transacting today in real estate are a little bit more um,
Seasoned.
less emotion based. I mean,
Yeah.
there's still emotions. It's a big purchase, but I'm seeing less and less of the. There was times we had just me and you, Jay, working together. We had like multiple deals of very high tension negotiations. Yeah,
Yeah. Yeah. Yeah, it got interesting, for sure. It was a battle from start to finish, and majority of the deals went at the height of the chaos. But I would agree that emotions are starting to settle down, and I think also a lot of the buyers who haven't gotten a property yet are seasoned, like you said, like they're
there
seasoned,
you
they
go.
understand the process, they understand the ins and outs, and yeah, they're emotionally invested, but they're not, hanging on a cliff if
Right.
it doesn't go their way.
And you and Jeff would speak more about this, but I think that it has to do with bidding wars still exist, but not to the extent that we saw them. Right, like bidding wars do create a heightened sense of emotion because you lose out on it 5 times, you finally win one. It feels more like the competition more than a real estate purchase sometimes. But
And
Right.
then you're not sure if you really want the house after you've lost out on 5 and you win one.
Right.
And you're like, yay,
Yeah.
wait, I don't want this house.
Yeah.
Right.
Yeah.
You just wanted to
Yeah.
win
So many
Yeah.
times. Yeah. I mean, we always say, listen, if there is even a multiple offer situation, basically say, forget about all the other offers. At what price point and what conditions are you willing to, handle, and then just put your best foot forward. What everyone else is doing doesn't really matter, because you can't focus on that, because you're never going to win that battle if you're trying to compare yourself to other offers, and there's certain information that we're not privy to, so we can't get it. So you have to focus on what you feel comfortable doing, and then we go from there. That's it. So,
You guys feel
That
like there's
comfort level
a
changes as
lot of
time goes
buyers out
on.
there?
I hear you,
what,
Jeff.
You guys
what was
feel
that,
like there's
Bob?
a lot of buyers that have taken a step back and are just waiting on the sidelines. They got
Yeah.
tired of looking.
Mhm.
They've been hearing about rates going down, things like that.
Yeah, I think it's a multi-level decision in regards to, they don't really know exactly where they want to be in New Jersey, and then things aren't really going their way. So the combination of, hey, if it happens, it happens, great. If it doesn't, it doesn't, because they're not settled on one particular area. If you have a client who's like, I want to be here, that's it, and they're always hunting, then they're usually moving forward pretty quick. So there are a lot of times there's still questions on their end that they're still iffy about before pulling the trigger to get it done. So, um, but yeah, I mean, like I haven't seen 20 plus offers on some properties just yet. I think the last couple have been around 4 to 6. So there's definitely a change.
Yeah,
I
I think that's
think,
what we're going to see. That's going to be our norm for the next few months, I think,
yeah.
until or unless something crazy happens, right? And I mean, and we're still waiting to see, like, the elephant in the room, the election's coming up, right?
Mhm.
What kind of an impact is that going to have on, the rates, on the stock market, on a lot of different things? And that can go in so many different directions. We're not going to go there, but it can go in
Hard.
a lot of different directions.
Yeah, I mean, for sure. I mean, the whole capital gains thing, I mean, that will change the industry forever.
Yeah.
Especially, investing or even inheriting property or anything. Like, you have to be super cautious when it comes to that. Then if that were to come into play, that would definitely change things. Um, but yeah, yeah, we do see some in seasonality, right? Like, Jeff, you were saying that we're seeing 40 homes on the market in Long Valley. Um, that's against seasonality trends.
100%. It's
Yeah.
completely different compared to the past few years, that's for sure. Where, like Joe, you were saying, like, as you got to this point of the year,
Yeah.
you're starting to worry about, okay, what's going to happen in December, January, February? How are we going to prepare for this? And us as real estate agents, we're also preparing too, right? Like, we have to, like, this is our business planning season, and we're trying to figure out what can we do now, because it is a slower season normally, but I don't see it slowing like it did last year or the year before. There were a couple years, the past couple years, I'm like, okay, I get to this point, and like, all right, well, what's going to be popping next?
Mhm.
Yeah.
Writing offers for people, nothing's sticking yet. I'm not getting a ton of listings, so how are we going to make business work? And then it just does, right? But this year again, I have like 3 or 4 listings that are just waiting at the market right now,
Mhm. Yeah. Uh,
which I'm thrilled
anything?
with.
Yeah, no, it's great. Um, Anything else you guys want to touch on? Uh, Obviously we did interest rates, transactions, real estate market. I mean, in the Northeast, we don't, I think in the Midwest, obviously in Florida, where the restrictions for building are a little bit looser and they can really push the inventory there, I think we might see a little bit slow down on appreciation rate on obviously existing homes already. But in the Northeast pocket, we can't build as fast as majority of the other the country. So yeah, I do see, houses can obviously continuously appreciating, but at what, are we talking about 3, 4? Because I mean, during, COVID in the previous months, we were, 7-10% in some
We had some
markets.
crazy
You know,
spikes in some markets
Crazy.
then. Yeah.
yeah. I mean, there are some markets in New Jersey that I don't think it matters what the conditions are, in the industry. Like Glen Ridge. Glen Ridge is like, for instance, it's such a small pocket. I mean,
Mhm.
it's its own universe. People want to be in there. I mean, you get a house listed for 700, it's going for 1.2, 1.3.
Yep.
You know, it's insane. So, and that's what's super unique about the Northeast and in New Jersey is that there's just certain pockets that are just unfazed by whatever's going on around it.
Right.
Well, that's why buying a house in New Jersey, it's almost like you can't lose. I mean, I hate to say that out loud ever, but even in really bad times, it flatlines, right? You know, so it never the depreciation, depreciation
Yeah,
just doesn't happen, right?
there's no you're right, there's no such thing as a bad purchase. It's gonna be,
Yeah,
is this gonna, 15, 20 years from now, is this gonna be, wow, we did well, or we did okay, but it's not gonna
Yep.
be like, can't believe we bought that house type of transaction.
Right.
Right. You just ride it out. Ride it
Yeah,
out.
it's
yeah.
I always say, New York, New Jersey, we're like insular from all the other market trends in the U. It's not even worth looking at market trends in the US. It's just not applicable.
Nah, it's all hyper local here. It
Yeah.
really is.
Yeah. Super unique. Um, Anything else, gentlemen, that you want to cover?
I think just like one thing that I was thinking about as we were discussing, like, what could tip the scales in favor of more homes going on the market. I think the trend's going to be the older population. A lot of the calls I'm getting now is, children of those people that are getting elderly that's saying, okay, well, you know, we've been putting this off for a few years. I think the interest rates have something to do with it. There was no urgency, but they see things aren't changing. People that are in their 80s aren't getting any younger in their
Yeah.
situation, and nothing's going to dramatically happen in the next year or so. So I think a lot of them are contemplating, okay, we got to get set up. We got to get our parents set up in a situation because they can't live alone anymore or something like that. You're going to see,
Right.
I think that's going to be your biggest chance for like an increase in listings in New Jersey.
Mhm.
Problem there is you can't downsize New Jersey, right? So you have a old elderly couple who has no mortgage on a house, but they can't, do the upkeep anymore. Are they downsizing to a townhome that's probably worth the same, if not more, than their house? Because all the townhomes they're starting in the low sevens, right? So they can't downsize. Florida, I mean, people are a little bit scared to go to Florida right now, especially with the fact that it's impossible to get insurance.
Yeah.
So where are they going?
Mm.
Mhm.
I guess that's it. Yeah, that's
That's
like
the
the double-edged
challenge.
sword.
That's
Yeah.
the challenge.
That's the big
We
challenge,
have
right?
we have more aging in place happening right now because of the lack of inventory and the lack of options. I mean, you look at, people are living longer, which is a great thing for all of us, you know. Um, but where do they go? And a few of the homes that are like one of the homes I'm going to have come on the market, it was, somebody lived there their whole life, right? They just passed away recently. I mean, this house is literally stuck in the 70s and 80s, but they lived their whole life there and they didn't go anywhere. Like that they're, till the end of their life, they're in that home.
Mhm.
There was no
Well,
downsizing. There was no going anywhere. It was just that
we're
was
going to
it.
see a lot of that. It's
Right.
unfortunate to talk about,
Right.
death and that aspect of things, but you're going to see a
Right.
lot because there's nowhere to go, like Bob said.
Yeah.
So yeah, you are going to have a lot of those estate sales, I think, situations coming up in the next couple of years.
Yeah.
Yeah.
Yeah. And Bob touched on it. I mean, the whole insurance industry is completely changed. Even in New Jersey. I heard that a buyer bought a house and the insurance company flew a drone over the roof and they already purchased it. And the insurance company said, "Hey, we're not going to insure you. We looked at your roof, and the age. You're going to have to replace it." This was after they purchased it
Yep.
as well.
I had a
It's
similar
insane.
situation recently as well. Same type of thing. They couldn't get insurance on it after we closed. I'm
Yeah.
like, what's happening here? And the house itself, like it wasn't a bad purchase. It was a really good purchase in a very nice area. And same type of thing. Like, oh, there's a couple of things here that we're worried about. We're not going to give you insurance.
Yeah, been
I-
getting a
Is that
bunch of calls like that.
is
It's
that even
insane.
legal to do after like you say you're
Yeah.
going to insure these people.
Yes, they can do what they
Yeah.
want. Yeah.
Yeah, you say you're going to insure these people, and you have to have insurance in place to be able to get the mortgage, and then after the fact, you come after them for a new roof, like,
It's crazy.
or higher policy. I'm like,
Insurance
people
companies are doing more inspections. That's the problem, and they
Yeah.
can't do it in time. They can't get someone out there quick enough for closing on a purchase, but afterwards they can. Yeah.
Yeah, it just
Crazy.
puts people in a bad spot.
Yeah, insurance is a whole nother topic we could have for a multi-hour long discussion. That's an industry that's just constantly pushing cost off on consumer. I mean, those costs are going to keep going through the roof. I don't even know what the end game is there.
I know, especially because of even in Jersey now too, is they're having wind mitigation inspections as well, like they do in Florida already. So, um, yeah, that's a whole nother topic. We don't know where that's going to end or how that's going to even impact everything down the road. And now in two is like there's especially in rentals, there's the lead inspections now.
Yep.
They're not cheap.
They're not
No.
cheap. And if any dust needs to be cleaned up, it has to be done by a licensed lead cleaner. And yeah, that's a whole nother avenue that's going to be changing as well. So good stuff. Good stuff.
It's always changing.
Yes. Well, that's what keeps it interesting, right?
It's
More
always
money.
changing, but not changing that much. It's one of those
Right.
weird things.
Yeah.
Right. Right.
With the new regulations and everything and transactions, Joe, how's that been going with, in attorney
I meant
review?
to touch on this and then before, and then I got distracted. But yeah, this is in the world of legal. This is a huge issue of concern on deals now. I've seen some gamesmanship by brokers where you have a deal that's going through several levels of attorney review and contracts modified 4 or 5 times, and on the final version, it slipped in the broker section certain commissions that are getting paid, and that holds water. Doesn't matter how it got in, whether it's ethical or not. And I had a transaction where that amount went from 2 to 2.5%. Nobody knows how it got there, but it got there, and that's what had to be paid out at closing. So the first place I'm looking on a before I get going with attorney review is turning to that paragraph on the brokers commissions, calling both brokers, confirming what they're supposed to get. And yeah, it's causing havoc. It really is.
Yeah. Yeah, it's not as transparent as it once was.
It
So,
overcomplicated things. It really
Yeah.
did.
It's a lot of steps to get to the same result in a lot of transactions. Instead of
It's-
sellers
I've been
paying the brokers, you have the buyers getting a credit to then pay the broker, and it's just like it's a waste of
Well, and then you
time.
have every company under the sun doing things in a
Asking.
different way.
Yep.
Everything's different. Everybody has different policies on how they're handling it, and it just adds to the more confusion for us in the industry. You
Yep.
know?
Yeah, it's a big disclosure issue for attorneys, though. It's something we never gave much thought of, to be honest, at all.
Right.
But that's the first place I'm going on any deal now is to the
Yeah.
percentage breakdown.
Yeah, and not like some of the offers I've seen on some of my listings, they're not the most updated contracts. They're using old
Mhm.
contracts as well. So
Right.
it's just like,
Yeah.
yeah.
On those people, I tell them, take this back, rewrite it, new
Yep.
contract, give me the terms the right way.
Mhm.
Because otherwise, what am I presenting?
Right.
Right. What are, and what I'm doing too, and like when with that commission, Joe, like, yes, there's that page where you check off different things, but I'm also writing it in the additional contractual provision section. So it spells it out black and white. This is how it's
which
being
is what
done.
should be done. The problem is
Right.
these regulations are so new, there's no guidance on it.
Right.
But that paragraph 43 where all the important provisions are in a New Jersey deal, that needs to be in there.
100%.
And my understanding is, there could be an oversight by a broker, but if it's not in there and it's in another section, I just get worried about intent.
Right.
And what's trying to be accomplished.
Right. That's why it's got to be outlined very clearly in section 43. There's no doubt.
Yeah.
It seems like it's gone from clear to a little bit blurry, right?
Yeah.
Right.
Not
And
the
that's like
intent of the whole law, but
what is a new regulation should clarify things, not make things more fuzzy. And that's my issue with it.
The government got involved.
Yeah.
see how it works, right?
Yep.
Yeah.
Let's fix something that doesn't need fixing.
That was out of all the things in the real estate world, that is one thing you could say did not need any fixing. It was very clear. Everybody knew what it entailed. Everybody's
Mhm.
role was clearly defined, and now it's not.
Right. And I always go back to this too. Like I've said it before with Jay, like I go back to like when I was in law enforcement and people were crushing cops and this and that. Like in New Jersey, the policies were very clear. Everything was so different here. Like there's certain states in the country where the policies and the procedures are so clear and the laws are so clear and things weren't happening like they were across the country. Same thing here. Like our paperwork in real estate was very clear on how the commissions were being paid out. It was
Yep.
upfront. Everybody's reading it and signing it, but I can't speak to what's going on in the rest of the country. And apparently, from talking to some people in other states, like their paperwork wasn't as transparent and clear about how people are getting paid.
Mhm.
You know, everybody that's involved in a transaction should know how their agent representing them is getting paid. That's
Mhm.
common sense. Like that should
Yeah.
that should be upfront and clear. You know,
Yeah.
the agents before August 1st that would say, "Oh, you don't have to pay me anything," like that. The money's still coming from the buyer at the end of the day. You know, the
Yeah.
buyer's bringing all the money. The money's then getting, going in different directions.
Yeah.
But now
Yeah.
it is confusing again because there's no standard across our industry right now on how this is being handled.
Well,
Yeah.
if there was a standard across the industry, it would be so much easier, right? It would be easier for the buyers. The buyers are kind of like in a wait and see as well. I mean, some of them are like, yeah, I don't want to sign that. Okay. But everybody is handling it differently.
Yep.
Mhm.
I mean, thankfully, I haven't had any pushback on buyer agency agreements, but I'm also doing like I'm having meetings with people like this, going over things, or meeting them
Mhm.
in person and going over things because they need to understand it. And if they have questions, they have to be able to have the ability to ask those questions. And I tell people, listen, I'm not gonna. I'll make it a short-term thing to begin with. If it works out, great. If it doesn't, that's fine with me, right? Like it's
Mhm.
just it is what it is. Try to give people the power to back away if they have to without any, I'm not having retainer fees charged or anything like that, like some people might be
Yeah.
doing,
Right.
you know,
Yeah.
but
It's I think that's the one good thing that came from this was, you know, being crystal clear on what expectations are and making sure that the clients are educated on how the process works now. So that, we did that anyway, but now it's, even
it should be
more.
done across the board now though. Like there was a lot of, I don't want to say luck in the industry, but like just people like a one-time meeting thing and I'm writing a contract. I'm getting like they had no clue how agency worked. They didn't have any idea how their agent was getting paid. And it's now like, and we're teaching all the people on our teams in our group, like you have to have these forms done. You have to review this stuff with people. They have to understand,
Mhm.
how this is working since August 1st.
Yep.
And it's nothing that we really wanted, but I think again, like Jay said, I think it is a good thing. I think there's some good things that are coming out of this, and it's going to make those agents that are the professionals stand out even more.
Mhm.
You know,
Yeah. And kind of the government, well, the lawsuit kind of got us. I mentioned this to Joe a couple weeks ago. Kind of got us on a technicality because the commission would go to, obviously at closing the title company would just disperse it from the seller to both sides.
right?
Whereas on the listing agreement, it should go to the listing broker, and then the listing broker disperses it to the buyer broker. That's how it's supposed to be, on the listing agreement. But we were skipping steps for efficiency when it came down to the closing. So it was a
That was
little,
definitely a part of it.
yeah, a technicality there. So, um, anything else, gentlemen, you want to touch on?
Yeah.
Nope.
All good.
Good.
Awesome. Well, thanks again for joining us on another call. And let's hope next time we have some better news and things are moving fast and people are happy and buying houses and selling houses. So thank you again for joining us. And we'll catch you guys on the next one.
Thanks, guys.
Always a
See you.
pleasure,
Yeah.
guys.